Oil on the move this morning as we continue to watch the headlines coming out of the invasion in Ukraine. When you take a look at crude oil up over $100, we're actually about $104 on WTI. Brent crude at about 105, call it 106 essentially. Obviously, a lot of developments with the IEA also chiming in. Now, let's bring in Philip Streible, Blue Line Futures Chief Market Strategist, here with more. Philip, it's great to have you on the program this morning. We just saw some headlines across the IEA was saying there would be no oil shortfall due to the Ukraine crisis. Just wondering if you have any thoughts on exactly how the supply and demand dynamics are shaking themselves out right now.
Well, it still appears that supply is flowing out of Russia. It's not had any kind of impact whatsoever. I mean, them coming off of SWIFT, we have seen companies have to try and make other alternative measures. They do produce about 10 to 11% of the global oil. And, we're just going to have to continue to monitor the situation right now.
And what's interesting is that all of these kind of oil price dynamics, some have argued, have been kind of irrespective of the Russia-Ukraine crisis anyway, and that regardless of the geopolitical risk, that barrels of oil were going to get more expensive. I want to take a listen to Chevron CFO Pierre Breber, who spoke with our morning show about oil price increases. Take a listen.
Markets are always volatile. Undoubtedly, there's geopolitics that are raising the prices now. We want the war in Russia and Ukraine to end as soon as possible. But this was started well before the Russia-Ukraine crisis. We've seen demand recovering very strongly as the world economies open up, and supply is responding, but supply is lagging. So we're seeing an upcycle now, but we expect prices to moderate over time.
Well, just wondering if you can kind of unpack some of that commentary that we heard from Chevron this morning with regards to kind of what was already happening before the Russia-Ukraine crisis. And now, when you lap on that geopolitical risk, what do you expect to happen going forward?
That was 100% in the cards. The supply was not increasing. I mean, we've seen small bump ups in the U.S., but there's no CapEx spending. So it's too politicized at the moment. We can't expand our oil production any more than it is. And the demand is increasing. I talked to so many friends today that are in Chicago that, because they dropped the mask mandate, all of a sudden everyone's coming back to work, and that demand is going to outstrip supply. So the setup was there. This just pulled forward the returns. This is unprecedented moves. The way they really get oil prices going crazy is if they do exactly what they did to Iran and they start putting on import tariffs on Russian oil, and you see other countries follow suit like Canada that are banning Russian oil imports. Canada doesn't import it. They're just stating the fact. And if you see others follow suit, that's where you're going to see WTI go up to 120, 130, 150.
120, 130, 150. Wow. I mean, tell us a little bit more about the kind of geopolitical intertwinedness of, I guess, the Eastern Europe and also the Asian region when you consider that. I mean, we had asked Chevron earlier this morning whether or not they were going to shut down their Kazakhstan pipeline given the connections out there. And basically what the CFO said was that, no, it's not directly in Russia. So, I mean, it seems like even though there's a lot of headlines around what's oil going to do, what's gas going to do, it seems like there's still been some, I don't know if you want to call it exclusions, but some wiggle room for the industry to continue running.
Look, there's a cancel culture that's surrounding Russia right now. It is what it is. That's just how it is. You're going to continue to see the demand globally outside of Russia is going to continue to increase. Unfortunately, their economy is going to be completely crippled. And if you look at even simple things like the jets that they have in there, the airlines and everything, okay, one, no one's flying there at the moment, and two, about 35% of Russia's fleet of jets are all leased. Other countries are not going to allow those leases to get renewed. So demand for oil within Russia is going to decline substantially, and also in Ukraine. It's how other countries respond. Do they start actually reassessing their energy independence and start implementing older methods again? It's how's the Green Energy Act going to respond?
Do you see any type of permanence coming from some of the decoupling that we've been seeing when you talk about Shell exiting ventures with Gazprom, BP selling its stake in Rosneft, right? Does this suggest that the kind of intertwinedness of the global oil market is going to look very different even after, hopefully soon, this conflict is over?
110% it's going to look different because of the fact that they are they're pulling the plug on all these projects. That's why you're seeing, BP's down today. You're seeing companies like Occidental and Chevron, they've been rallying today. It's all about the exposure to and intertwinedness with Russia. They decouple it. What are the chargebacks that they have to pay? And then how are they going forward? I mean, it's kind of a rude awakening when you find out that 70% of, Germany's energy dependence comes from one country and the country goes to war with another. What happens?
How do you think investors are responding to both of those companies' announcements?
Well, you saw a rotational shift. You saw people come out of companies like BP. It was down immediately, and they went into other companies like Occidental. And I think that the XLE is probably the better way to play. It'll get you a little bit more diversification. The futures are up like 9% right now, so I think it's a little bit crazy. The CME has launched 100 barrel, 500 barrel, and the 1,000 barrel contracts, so you can risk manage the current volatility in the market appropriately, but you've got to select the right contract size given the account.
All right, XLE, I mean, quick and dirty and easy, I guess. Philip Streible, Blue Line Futures Chief Market Strategist. Thanks so much for joining us this morning.